James Bullard is the CEO of the Federal Reserve Bank in St. Louis. It's an extremely influential post with jurisdiction over financial operations in 6 states, including Arkansas. Next year, Bullard will also serve on the powerful Open Market Committee, which controls key interest rates and sets monetary policy for the nation. Well, where does he see Arkansas and the nation heading in this current recession? How have the Fed's policies made a difference? And what happens next? There's a lot to consider and discuss, as I learned in this one-on-one exclusive interview. You see us coming out of this recession officially or technically sometime in 2010?
I think officially the recession will end sometime in 2009, actually, but we won't know that until maybe 2011. The way this works is there's a dating committee. It's an unofficial process, and then they will prognosticate something in the future, and they will say that now we decided that the recession ended, but we'll be far past the end of the recession before they will come out and pronounce the end of it.
What do you think a recovery will look like? Will it be a jobless recovery? Will there be some things different in economic indicators than previous ones?
I've held out some hope that we might get kind of a V-shaped recovery because if you just look at the sort of the statistics of how the economy works and stuff, you have a big downturn. A lot of times you do get a big rebound. But I've been convinced by many different people that it really doesn't look like we'll get a real strong rebound like that in this situation because households have been very scared by this financial panic, and they have really pulled back tremendously, and they've delayed all major purchases, and they've tried to really hunker down and avoid all economic decisions that they could avoid. And I think it will just take them a long time to kind of come out of that. And so I think what you saw after the panic was a real ratcheting down of consumption. And then what you'll see now is it won't go right back up. It will go up only slowly from this lower level. And that feels to me like where we are right now. And also for businesses, I think when you talk to them, they have done a great job in many ways of, the demand for their products went down, and they said they recognized that, and they said, I'm going to have to trim workforce, I'm going to have to cut costs, and I'm going to have to be able to operate at this lower level. But they're not really, if you talk to them, they're not really planning to bounce back up to their higher level. They're planning to survive and thrive at this lower level and then grow from there. So that seems like the best explanation to me about where we're going to go for a recovery, that it'll be kind of a slow climb out of our doldrums here.
We've watched manufacturing jobs fade for years now, but particularly in the last several years, the manufacturing jobs have really fallen away in the United States. How do you see those jobs being replaced? Are they replaced by new technology, by jobs in the service sector, in ways that we haven't thought of yet?
Well, I think that's right, and it is a tragedy that you've seen long-term decline. Some of that is more capital-intensive production technology for manufacturing, and some of it's surely lower wages can be done more cheaply elsewhere. But our country also does many things very well, and I think we'll continue to expand in many new areas, especially where we're the technological leaders, and so those are the places to look for jobs in the future. I think when you're down at the bottom of a business cycle, it's always hard to see how anything good is ever going to happen again. But we know from history that that's not the way it is. Good things will happen in the future. So.
How big do you think the recession that we're in right now, I guess, how big do you think it will be in terms of history? I know a lot of people that I will talk to in business have said, obviously there's still people around that remember the Great Depression. A lot of people hearken back to the recession of the early 80s as kind of a reference point, but I don't talk to a lot of people that say, once we get through this, I'm moving back on into my business like I used to run it. I think this will fundamentally stay with some people for a really, really long period of time.
Yeah, it's a big recession. It's probably going to go down as the largest one in the post-war era. It's really nothing like the Great Depression. I mean, if I can do a back of the envelope here, I think national income so far has fallen about 4 or 5% here, 4% so far. In the Great Depression, it fell 30%. So you've got a long ways to go to match anything like that. I don't think that's not what we're looking at here. The 81-82 recession was very severe. Unemployment peaked at 10.8% in 1982. I don't think we're going to hit 10.8%. So on that dimension, we're going to do a little better, I think, than 81-82. The other thing about 81-82 is you had this rapid recovery. I don't know if you remember 83, 84.
I was kind of young, but I wasn't paying as much attention.
Yeah, you did have this rapid recovery, and now, as I was just saying, it doesn't really look like we're going to get that. So you get this shallower thing. So that's going to make it seem a little worse than because by the time you got to the mid 80s, the economy was humming again, really, and things were going quite well. So. That's where we are, but it's a severe recession, but it's on par with 81-82, I would say.
When we come back, St. Louis Federal Reserve Bank CEO James Bullard shares his thoughts on the nation's growing deficits and national debt. Can we dig ourselves out of this multi-trillion-dollar hole? I'm Roby Brock. This is Talk Business. We're back with more after the break.